Ready, aim, and bullseye. That is what we're going to focus on today's 3 for 3. Koki Cox here with AlphaVest. We are rounding the bend here at year end. So I wanted to bring you a 3 for 3 here on December the 18th. Got some great things to report as the Santa Claus rally continues. And one bullseye we will not hit today is me being under 3 minutes. I've been trying. So it's good to be with you again. With that, when we move through our points for week in review this week for 3 for 3, is 7 the lucky number? We hope it's 8. You know, we are on a 7-week winning streak here across markets. And as we continue to aim our arrow, as we have throughout 2023, towards quality and towards dividend achievers. You've heard me talk much about our aristocrats and our AlphaVest equity income models. While the Dow is only up maybe 13% year to date, vis-a-vis its counterparts of the Nasdaq and the S&P 500, up in the 20s and 30s/40s. The Dow has been leading those other three indicators, rather the other two counterparts, for the last 3 weeks running. So our aim was early in terms of quality and in terms of dividend yield in those aristocrats. Yet, as I've shared in weeks past, our aristocrats model is up 21% plus year to date, and our equity income model is about neck and neck with the Dow, up about 13% year to date. That said, of our winners here in front of you, we've got Caterpillar, Lowe's, Home Depot. We've got a regional banking ETF, KRE, and EDV. EDV is the number 5, the 5th place of our winners. It's notable that this is a member not of our aristocrats or our equity income model, but of our bull bear tactical model, as well as our fixed aggressive income model. So EDV is an extended duration exchange traded fund, up 7.35% last week, thanks to rates falling from 5% to 4% in a very short period. So something that many of us anticipated. But it's nice to be able to take and earn returns in your portfolio, not just from stocks, but also from bonds. So that's something we aimed at and we hit fairly well. In addition to your positions in your portfolio, such as Truist, which is the former BB&T Bank, as well as in this KRE, or the regional banking ETF, which has done so well, up 8% last week. Our losers, you see Brown, Cardinal Health, Eli Lilly, United Health, and Microsoft. I think it's okay to see some losses there, given extreme gains year to date. Let's see, we've got Eli Lilly, not on this page, but up 56% plus year to date. Microsoft up 54% plus. It should be noted that we do have some members that are going to be for evaluation rolling out of our equity income model come January, by virtue of the fact that they've grown so much, such as Apple and Microsoft, Visa, and Eli Lilly, that their dividend yields are no longer 1%. So that's one of the criteria of being in our equity income model. And because the price has grown so much over the past year, the dividend yield has declined. So we will look to roll out those positions and bring in more higher dividend names into those portfolios come January. And I think that'll come at a good time, as tech has had a really good year. This is sort of one of those healthy checks and balances. As those grow and the dividends recede, they're going to roll out of the model, and we'll replace them with perhaps better suited equity income model portfolio holdings. There is a lot to be said on this slide. So here's what I'll tell you. There's 4 biggest market stories that I want to just sort of recap from 2023 and dovetail those with what's happening in 24. So I think the best information for you here is there's a lot on the slides here. There's a lot that I'll share verbally, but also the email is not going to contain all of this information, but the blog will. So the blog at alphavest.com, if you've not subscribed, you can always unsubscribe, but we'll have a lot more meat and potatoes, if you will, as well as graphs and things that, the graphs really help me learn more. So you may appreciate that. With that, we've been talking for a while about higher rates for longer. And that's getting ready to change. That's getting ready to change. And that's really good news. And that's why markets have been reacting so well with the Santa Claus rally here at year end. People are predicting anywhere between 4 and 6 or more rate cuts next year. So to be continued. The Magnificent Seven. Here's something that I do think is a worthy soundbite relative to the Magnificent Seven. We've heard so much about them. And again, we're hoping that 7 isn't the lucky number. We're hoping it's 8 with 8 straight weeks of gains on markets. But with respect to the 7, NVIDIA, Tesla, Meta, Apple, Amazon, Microsoft, and Google, you own all of them, okay, within the AlphaVest portfolios in small, bits and pieces. We do own more Apple and Microsoft than we do of any of the holdings. But that said, one of the more interesting sound bites that I found this week is that the concentration issue is probably not going to be that much of an issue next year. That comes as a great relief to me and for investors at large, because most investors do have a really high allocation to these holdings, and they're probably not even aware of it. So the fact that the rally may continue with those 7 is good for most investors at large, as well as you. But we've got a tighter eye on it, and are not overly exposed in those 7 yet participating. AI, of course, has been a big story of 2023. And thankfully, Microsoft is one of the bigger beneficiaries in your portfolio, and one of the big 7 that's of the larger of the allocations which we own. That said, I think the story for 2024 with AI is that a lot more market participants are going to come out of the woodwork and start participating more so than just, say, NVIDIA and the usual suspects like the Microsofts and the other semiconductors that are currently participating. And then finally, soft landing. You've heard it a lot from me. I will put in the blog and in this week's email a link to a very robust soft landing message that I sent out about a month ago. These soft landing sentiments have been sort of bolstered and validated by markets recently, as well as by Fed position of no more tightening, and the fact that they will be cutting soon. Who knows when? Most are predicting after May. I'd like to think that we'd see something prior to that. Despite a soft landing, which is fantastic, it has a soundbite for 2024 that I think is worthy of mentioning, is that growth rates still remain quite slow and reduced rather than the growth rates we saw this year on markets. So how we continue to participate in markets in the coming year with slower and lower growth rates, I think we'll be continuing to have a story unfold as we started in 2023, and that was that of dividend stocks, high quality, and the aristocrats that you're all enjoying within the AlphaVest portfolios. So, and the other thing for 2024 to be thinking about is will there be another inflation wave? What's great is we've seen inflation year over year go from 9% to almost 3.1% to be exact. So with that, I knew we wouldn't hit the bullseye with 3 minutes, but I've missed sending you videos. I hope you've appreciated this one. And I do want to say, as we do a little bit of housekeeping here at year end, a couple things. I've been trying to be Mrs. Claus not only to staff here at AlphaVest, but also to my clients with our annual It's a Wrap party and little thoughts and messages. So I'm here for that. I've cleared my schedule. I've got lots of time between now and the end of the year. But also, that said, I have given everyone else at AlphaVest the rest of the year off, full paid. And so that was my gift to them. And it's the gift of time, because I just really wanted to lead from a place of perfect day, time. You've been hearing me speak about time and writing about time since Thanksgiving. And these are times that not only are hard on others with the holidays, with love and loss, but also just the hustle and bustle of the holidays. So if there's anything that I can give you, I'd like that to be time, just as I've done that with AlphaVest staff. So with that, I'm hoping that you will embrace our new texting application. We've got the number here on the screen. It's 866-662-7547. So it's 866-662-7547. Many of you have received messages from us, but that's a great way to short form and reach out to me or to Donna, as well as a great way to get on the schedule. And so we're running a little challenge here, because I am really excited for 2024 and to kick off the new year. We've got great performance enhancements as we've engaged with Morningstar. So we're really looking forward to connecting with you and showing you how robust and yet simple those performance reports are going to be, as well as do a meaningful review and a kickoff for 2024. So a little challenge here with our texting, that those who text to get on the schedule for January 2020 will get the quickest and the easiest slots available. So I hope you'll do that. I hope you'll reach out and just send me, maybe Mrs. Claus, send me maybe a little happy holidays message, because I would love to hear from you. As always, you can email us, but the short form and texting is appreciated at this time. And it could not go without being said that I really want to end this message just saying how grateful. Gratitude and gratefulness is not just for Thanksgiving. For me, it's definitely comes also more so here at year end. Just grateful for another year together. And as I close, I want to send you with a couple of things in terms of further year-end housekeeping, which is gains and losses and year-end tax loss harvesting. It's done. You don't need to do it. So at your next holiday party, if the cocktail talk comes up about gains and losses, you can just have another sip or another nibble and just know that it's already been taken care of for you for 2023. As well as your required mandatory distributions. So we are, it's a wrap here from AlphaVest. Yet again, I'll be working between now and the end of the year on some really great fun and exciting initiatives as we look to kick off 2024 with a bang. So thank you so much for letting me be in your inbox. And again, grateful for another year. Love to hear your comments and feedback on this week's 3 for 3. And we will not be back with you with 3 for 3 until January the 8th, which is the second Monday of the year. So with that, again, appreciating your sentiments and feedback. And we are sending you a very, very, very Merry Christmas, Happy Holidays, and a Happy New Year.